Did you know the average age of a U.S. home is now pushing 40 years old? A record high.
Wow, 40 years.
Yeah. And that means millions of houses needing, well, a lot of love, constant upkeep, big renovations eventually. It points to just this huge market for home improvement.
It really does. And it's fascinating because you might think home improvement is just, painting a fence or something small.
Right.
But it's actually this multi-billion-dollar industry.
Mm.
And it's undergoing some pretty significant strategic shifts right now. It's much more complex than it looks.
Exactly. And that's why today we're doing a deep dive into some really, well, potentially transformational news from one of the biggest players out there, Lowe's. We'll be digging into their Q2 2025 earnings call, press release, trying to cut through the corporate speak.
Get to the good stuff.
Yeah, get to the important nuggets. Our mission is to help you understand not just what happened, but why it actually matters for the future of home improvement and, for you.
Sounds good. Let's do it.
Okay, so let's kick things off with Lowe's second quarter performance. The headlines look pretty solid, right? $24 billion in sales, comparable sales up 1.1%.
Hi.
And adjusted diluted EPS up 5.6%. Sounds okay, but what does this really tell us beyond just the numbers?
Well, they do reflect a solid performance. It seems balanced between the do-it-yourself folks, the DIRs, and the professional or pro segment.
Okay.
A big piece this quarter was seasonal sales recovering. The weather finally improved, which helped a lot.
Right. Weather always plays a part there.
Always. But what's really interesting, I think, is their focus on these perpetual productivity improvement initiatives, PPI they call it.
PTI. Okay.
That really seem to drive better than expected operating performance. It's about optimizing every little thing, supply chain, store layout, constantly squeezing out more efficiency.
Okay, efficiency makes sense. Now, shifting gears a bit to how we shop. Lowe's online sales grew 7.5%. That feels like a pretty big jump for a company we think of as mostly physical stores.
It is significant.
So is that just them riding a wave, or is it their own specific strategies paying off?
It's definitely a mix, but their own initiatives are really key here. They've been actively working on making the online shopping experience more immersive, more appealing. And crucially, they're getting more traction with their MyLowe's reward program. This isn't just, a simple discount thing.
Right.
It's designed specifically to get people coming back, build loyalty, encourage repeat purchases for that next project, big or small.
And connecting with customers. It's interesting to see them working with influencers like Mr. Beast and still with Lionel Messi, the NFL. What's the play there? Who are they trying to reach?
Yeah, that's clearly about driving brand engagement, especially with Gen Z and millennials. It's a very deliberate move.
Reaching younger folks?
Exactly. Right. Using trusted voices on social media, big sports partnerships, trying to make home improvement feel more relevant, maybe more aspirational to those demographics, moving it beyond just being like a dad's project.
Interesting angle.
So if we connect this to the bigger picture, the sort of macro environment, it's kind of interesting. Despite inflation, higher rates, homeowners seem generally okay financially.
Yeah.
Strong balance sheets, wage growth is there, unemployment's low. So it begs the question, what's the long-term view for home improvement? And why is Lowe's making these big moves now?
That's a great point, because the underlying trends in housing do seem pretty strong. That aging housing stock we mentioned, record high.
Right. Lots of old houses needing work.
And homeowners have substantial equity. Plus, there's this huge pent-up demand people talk about. What is it, like $50 billion in deferred projects?
Something like that, yeah.
Yeah.
A huge number. Homeowners putting off those bigger discretionary things.
So people staring at their old kitchen thinking, okay, this is the year. Is that kind of what Lowe's is betting on?
That's definitely part of it.
Yeah.
That pent-up demand is real. And you add to that the underlying need for new homes. Was it an estimated 18 million needed by 2033? So yeah, aging homes, homeowner equity, that deferred demand, plus the need for new construction. It all points to a pretty healthy pipeline ahead for both improvement and new builds. It gives companies like Lowe's the confidence, to make these big investments.
Okay, so they're confident these investments will pay off when the market maybe fully turns. Yeah. But are they seeing strength now in specific areas?
They are. They mentioned positive comparable sales in 9 out of their 14 merchandise divisions. So pretty widespread.
Okay.
Big uplift in seasonal stuff, especially hard lines. It's hardware, lawn and garden, tools. Continued momentum in building products, so repair and maintenance, and home decor paint, flooring, appliances. They also seem excited about adding Tile as a key brand alongside the usual suspects like DeWalt, Craftsman, Trex, TimberTech. It's a pretty broad-based strength, not just one thing carrying the load.
Got it. Let's circle back to that perpetual productivity improvement, the PPI thing. You said it boosted performance. How are they actually doing that? Like, what does it mean on the ground? And for us as customers?
All right, PPI.
Yeah.
It's about those continuous small gains. So, for example, they have better assortment planning tools now for seasonal stuff.
Okay.
Which means they predict demand better, less stuff left over for clearance at the end. That directly helps their gross margin.
It makes sense.
Another example, streamlining how freight moves. Smarter truck packing, better labels, new carts in the back. It sounds small, but it cuts down handling, makes staff more productive, gets product to shelves faster. And they're also diversifying where they source products from. More countries involved. That helps manage costs and reduces risk if there's an issue in one place. Stabilizes things for the customer too, potentially.
And it sounds like tech is hitting the sales floor too, this Milo Companion thing. Is that really helping the associates? And does that help us?
Yeah, Milo Companion. It's an AI-powered app for the associates on the floor. Think of it like a digital mentor.
Okay.
Helps new folks get confident faster, gives experienced people info across departments. So if you ask someone in paint about mulch calculations,
Right, happens all the time.
or someone in hardware about, say, energy-efficient appliances, they can pull up accurate info right there on the spot. Apparently, adoption is strong, and it learns from feedback, so it gets better. Means faster, smarter help for you.
That could be genuinely useful. Okay, and what about the pro customers? What's their mood? What are they telling Lowe's?
Their PRO survey gives some good insight. Backlogs are apparently stable, which is good. Over 75% feel confident about their jobs.
Okay, positive size.
They're still focused on those smaller repair and remodel projects, which fits the current market.
Yeah.
But the big concerns are rising labor costs and, maybe more importantly, the ongoing shortage of skilled tradespeople.
The labor shortage, still an issue.
Huge issue. Plumbers, electricians, carpenters. It's a real bottleneck. It affects timelines, costs, everything.
Okay. Now let's get to the really big news. The acquisition of foundation building material, or FBM. Lowe's is calling it transformational. What exactly is FBM, and why is this such a big deal?
Right, FBM.
Yeah.
They're a major distributor of interior building products. So think drywall, metal, framing, ceiling systems, insulation. The core stuff inside the walls for construction.
Okay.
And it's transformational because it catapults Lowe's into serving the large pro customer segment much more effectively. So this is a market they really couldn't reach properly before.
Like big builders?
Exactly. Big residential builders, large commercial contractors.
Yeah.
FBM gives them access, unlocks this massive $250 billion total addressable market for these kinds of products. It's not just selling more screws, it's a whole different ballgame.
Wow. And FBM themselves, they have a strong track record. What made them stand out?
Oh, yeah. FBM has a solid 14-year growth history, great reputation with both residential and commercial pros. Their customer base is really diverse, too. Hospitals, data centers, big office buildings.
Yeah.
That gives them stability, and they know how to scale. They've integrated something like 60 acquisitions and opened over 50 brand new locations since 2011. Very disciplined. Plus, they're market leaders in key things like drywall, ceilings, metal framing. Lowe's basically bought immediate leadership in those categories.
And geography matters here too, right? How does FBM's map presence fit with Lowe's?
Crucially important. FBM has a strong presence in places like California, the Northeast, the Midwest, areas where Lowe's maybe had less store density or a weaker pro foothold.
Okay.
So this acquisition gives Lowe's a much stronger pro presence, pretty much overnight, in these key, densely populated urban areas. Fills in some major gaps on their map for serving those large projects.
So, putting myself in the shoes of a pro customer, how does this actually make my life easier? What changes for me working with Lowe's now?
Several key things. First, faster fulfillment, especially for big orders. Think getting a whole flat bed of drywall dropped efficiently at your job site. FDM's logistics are built for that.
Right, big difference.
Second, way more products. FBM stuff becomes available through Lowe's Pro channels, and Lowe's complementary things, tools, safety gear become available to FBM's customers. More one-stop shopping.
Okay.
Third, better digital tools. FBM has this mobile app, My FBM, for real-time pricing, ordering, tracking. And they have AI for blueprint takeoffs, estimating materials from blueprints. Integrating that with Lowe's Pro desks could be a huge time saver for pros.
The AI estimating sounds interesting.
Definitely. And finally, enhanced trade credit options, which, for managing cash flow on those really big projects is absolutely essential.
Right, credit is key. And this isn't the only big purchase. They also recently bought Artisan Design Group, ADG. What's the grand plan combining FBM and ADG? What does that look like?
Yeah, putting them together is really the strategic vision here. ADG focuses more on the finishes, flooring, cabinets, countertops, often including insulation.
The stuff you see at the end.
Exactly. While FBM provides the structural interior stuff, drywall, ceilings, insulation, doors. So the idea is you combine them, and Lowe's can offer large pro customers the whole package, a full complement of interior finishes, as they put it.
From foundation to finish, basically.
Pretty much. From the studs up, everything inside the walls.
Yeah.
It makes Lowe's a really comprehensive solution provider, especially for new home construction and big renovations. It's an evolution in their strategy, positioning them for that expected rebound or inflection in housing, a true one-stop shop.
Okay, let's talk money again. $8.8 billion for FBM. That's a huge check to write. How are they paying for it, and what does it mean for their financials, short and long term?
Yeah, $8.8 billion is substantial. It's being funded with debt, a mix of short-term and long-term. The key thing they emphasize is that it's expected to be accretive to adjusted diluted EPS in the first full year after closing.
Meaning it should add to earnings per share, basically.
Right, excluding certain one-time costs and adjustments. And they have a clear plan to pay down that debt quickly. They're aiming to get back to their target leverage ratio by the end of 2027, using the strong cash flow from the combined businesses.
Okay, deleveraging is the priority. But what about shareholders who like buybacks? Does this mean share repurchases are off the table for a while?
Yes, exactly. They confirmed share repurchases will be paused until 2027. The priority is paying down that acquisition debt.
Got it.
They reiterated their capital allocation priorities remain the same, though. Number 1, invest in growth, like these acquisitions. Number 2, the dividend targeting that 35% payout ratio. And then number 3, return excess capital via buybacks. So buybacks take a back seat for a few years.
Makes sense. They also updated their full-year outlook for 2025, including ADG now. It seems to imply things gradually getting better in the second half. Is that them banking on the whole market improving, or is it their own initiatives kicking in? Aren't they worried about being distracted by integrating these huge companies?
Good question. The updated outlook seems more driven by their own strategic initiatives gaining traction, rather than them predicting some big, sudden improvement in the overall market. They're focused on what they can control.
Okay.
And on the distraction point, they were careful to mention they have separate, dedicated integration teams for both ADG and FBM.
Okay.
The idea is that those teams handle the integration complexity, allowing the core Lowe's business units to stay focused on their day-to-day strategies and those perpetual productivity improvements, trying to manage the change without dropping the ball on the main business.
A disciplined approach, sounds like. Okay, so we've covered a lot. After this deep dive, what's the bottom line? What does all this mean for you, whether you're doing the small DIY thing, planning a big reno, or just watching the market?
Well, I think the key takeaway is Lowe's is making a very deliberate strategic shift. They're aiming to capture a much bigger piece of the professional market, particularly the large pro involved in new construction and major renovations. They're using these big acquisitions and technology as the levers to do that.
Right.
For pros, this could mean a significantly better, more streamlined, more comprehensive experience.
Right.
And for all customers, as Lowe's gets more efficient operationally and expands its reach, potentially, that could lead to better product access, maybe better services, maybe even better pricing down the road.
Right.
It raises the bar.
Absolutely. Which leads to a final thought. Considering this big pivot by Lowe's, becoming this all-in-one solutions provider for the large pro mixing, distribution, AI, wide product range, how might this push their competitors, like Home Depot, to react, to rethink their own strategies?
Good question.
And ultimately, what could that competitive dynamic mean for the innovation, the services, the choices you see in the home improvement aisle or on their websites in the years ahead? Something to think about.